Hello and good afternoon. Thank you for joining us for this Merrill Investors webinar. My name is Dr. Mark Azzopardi and I am a co-founder manager of Merrill CFA PLC. Nikos and Andrew, two of our analysts, will be joining us to take us through today's webinar. They will share their perspectives on looking beyond the storm by taking a long-term view on the semiconductor industry, as well as two major players within the sector. Before we kick off, some housekeeping. The duration of this webinar should be around 35 minutes. Any questions can be sent via email on asset.management@jesmond.com or on the question section for those joining us on the Brightalk platform. The content of this presentation has been prepared for general guidance and information purposes only. And information provided throughout the presentation does not constitute any financial investment or professional advice or recommendations. So, without further ado, I would like to invite my colleagues Nikos and Andrew to start with their review.
Hi everyone, I'm Nikos. Thank you, Mark, for the introduction. So today I'll be covering the first five points of the agenda, and so I'll start with a quick overview of the industry, and then I'll move on to speak about Qualcomm, a brief company analysis of Qualcomm. And then my colleague Andrew will walk you through a company analysis of Nvidia and some technical analysis of their stocks. Okay. So I'd like to start the presentation by highlighting the importance of chips in our everyday lives. Without them, a big part of the tasks that we're conducting daily would be impossible. So, as you can imagine, it is quite a large industry with an estimated market value of around 590 billion US dollars as of 2021, and a large part of it, around 32%, as you can see from the chart here, goes into computers due to their high needs of data processing and storage. Second in line, we have communication devices such as mobile phones and wireless network equipment, for example, which account for around 31% of the total market. And then semiconductors are also important for industrial applications. I don't know, such as, for example, robotics or energy management. And they go also into other consumer electronics like microwaves or refrigerators. And finally, they are used by both automotive sector and by governments for military purposes, for example. And besides their importance, the industry is expected to grow fast in the coming years due to several secular trends. According to a research published by McKinsey, the industry is expected to realize high growth of around 7% annually until 2030, which will lead its market value to grow from around 590 billion US dollars to surpass the 1 trillion mark by 2030. From the bar at the right-hand side of the slide, it's obvious that three industries will contribute around 70% of the total expected market growth. One of the fastest growing end markets will most probably be that of automotives, mainly driven by the e-mobility and autonomous driving trends. And then wireless communication devices and computing and data storage are expected also to grow substantially, as the demand for artificial intelligence and cloud computing is growing fast. And this was also accelerated by the 5G adoption globally. Now, in terms of geographic breakdown of the industry, US has been and it remains the dominant player globally. In the early 1990s, as you can see from the chart at the left-hand side of the slide. So in the early 1990s, Japan and US were dominating the market. However, since 1993, Japan started gradually losing its power due to a transfer of demand from simpler chips to more complicated ones that would go into computers, an area in which Japan was lagging behind the US at this point. In the meantime, Europe and other Asian countries started investing quite substantially in the industry, and that resulted in Korea, Taiwan, and China gaining market share from Japan. From the chart in the right-hand side of the screen, it's obvious that the US remains one of the leaders with 47% of market share globally, and it's followed by Korea, which account for just 20%. Now, we expect the dominance of US in the field to remain in the coming years, as US companies are innovating the most in various areas of the market, like in memory chips or graphic processing units, for example. So this is in line with the chart in the next slide, where, as you can see, US companies invest more than 18% of their annual sales to research and development, which is the highest rate when compared to its global peers. The US government also provided proof that the semiconductor industry is a critical area for them, as they enacted the Chips for America Act in fiscal year 2021, through which around 52 billion US dollars of federal funding will be provided to support investments in semiconductor manufacturing capacity. Now we can move on to the supply chain of the semiconductors. So, if we start with the box at the left-hand side of the slide, this is where the supply chain of the industry actually begins. Here we have the manufacturing equipment suppliers, which are companies that manufacture the appropriate machinery to be subsequently used in the production of the actual chips. As you can imagine, the manufacturing process of a semiconductor is quite extensive, and a lot of steps must be followed in order to arrive at the final product. So these steps they span from wafer cleaning at the beginning of the process to deposition, etching, and several lithography and several other steps. So as you can imagine, there are many different tools that and equipment that needs to be used in order to arrive to the final product. Second in line in the supply chain are companies which are known in the industry as foundries. They operate large-scale manufacturing facilities and offer their production capacity to companies that only design the chips, or integrated semiconductor firms which need more manufacturing capacity to fulfill the demand of their products. And finally, we have companies which design and in some cases also manufacture the end chips. And a convenient categorization of them would be in terms of families of chips, families of semiconductors that they produce. For example, starting from the top, there are companies specialized in consumer electronic chips, such as mobile phones and computers. And some other categories would be memory chips, graphic processing units, which are also known as GPUs, and finally, analog chips. So on the next slide, we'll get a picture of the major companies operating in the different segments of the supply chain described here. So if we start with the top left box, the first step in the supply chain, which is the manufacturing of equipment, we can find companies like ASML and Nikon that produce the lithography machines, and this market is quite concentrated, with ASML being the leader, the dominant player over there. Then we have Applied Materials, Lam Research, and KLA, which produce equipment for other stages of the manufacturing process, like wafer cleaning, etching, and others. If we move on to the top right box, someone can find some of the biggest foundries in the world, like the Taiwan Semiconductors or TSMC, Samsung Electronics, and Intel, for example. Next in line, as we mentioned before, there are companies which both design and in some cases also manufacture the chips. And if we start from the middle left box, there are companies that produce chips that go into consumer electronics, like for example Qualcomm and MediaTek, that offer chipsets for mobile phones, or Skyworks and Qorvo, which offer more connectivity chips. Memory chip companies like Micron and SK Hynix offer data storage solutions for data centers or computers, for example. Then we have GPU companies like Nvidia and AMD, which produce semiconductors with applications in gaming, content creation, and machine learning, for example. Finally, there are companies which are mainly focused on analog chips, such as Infineon in Europe or Texas Instruments in the US. And they produce analog chips which are simpler in terms of design, and they are used mainly in automotives, Internet of Things, and various consumer electronic devices as well. Now, one of the companies in the supply chain that we think that is well positioned to capitalize on the fast-growing area of semiconductors is Qualcomm, which I'm going to speak about in the next few slides, even though it will be a brief overview for the sake of time of this presentation. So, Qualcomm, let's start with the main business of the company. It reports its revenues under three main segments, as you can see from the chart, namely CDMA technologies or QCT, technology licensing or QTL, and then we have the strategic initiatives segment. However, in this presentation, I'll be focusing more on the first two, which are generating the majority of the revenues of the company. So under the CDMA technologies business segment, Qualcomm develops and supplies integrated circuits for use in computing, data communications, and other applications. For example, under this segment, it develops the famous Snapdragon family of chips, which is a highly integrated circuit that goes mainly into smartphones, with some of the largest Android mobile manufacturers such as Samsung and Xiaomi using the Snapdragon chipsets in their flagship models, like Samsung Galaxy S22 or the Xiaomi Mi 11 and several others. Now, under the technology licensing segment, Qualcomm provides rights to use portions of its intellectual property portfolio, which includes certain patent rights, essential in the manufacturing of certain wireless products. So now, moving on to the chart of the slide. As you can see, since 2010, the company has been able to grow its top line figures with a CAGR of around 12%, while in 2021, its revenues increased substantially by almost 43%, primarily due to the strong 5G adoption globally, along with higher automotive and Internet of Things trends. In order to understand now the revenue drivers, we can move on to the next to the end markets that it serves in the next slide. As you can see, they are quite extensive. A big part of the chips is used on handsets such as mobile phones and tablets in the form of CPUs, central processing units, or connectivity chips, for example. And this accounts for around 60%, more than 60% of its total sales. Also, quite recently, Qualcomm announced that it's expanding into the PC space with 2 new chips, while it has already announced agreements with computer manufacturers like HP, Acer, and Asus for these products. In the area of automotive, Qualcomm is also very competitive, as it has been able to set up new partnerships, such as the deal that introduced recently with BMW to power several of its digital chassis capabilities. And it also expanded work with Honda, Renault, General Motors, and several other Chinese car makers. Finally, Qualcomm's technologies go into the Internet of Things devices, as they assist with the data processing and the connectivity of those products. Now, we believe that the company will be able to perform well in the coming years, as its competitive advantages are strong compared to its peers. So, first of all, as you can see in the chart here, it is one of the leading players globally in terms of application processors in the smartphones. Qualcomm in the last quarter of 2021 held around 30% of the global market, only behind the Taiwan-based MediaTek. However, a big differentiator, in our opinion, between those two leaders is that Qualcomm offers high-end chipsets that mostly go into flagship smartphones, like mentioned before, while MediaTek is focused more on budget-oriented solutions. So in that sense, the two companies are not competing directly due to the different target markets that they have. So we expect in Qualcomm, in the high-end area of smartphones, will be able to retain its leading position due to high R&D spending and the large amounts of patents that it holds. And on top of that, I would like to mention that the Snapdragon chipsets that Qualcomm produces offer one of the highest speeds of processing data in the market, according to market reviews on smartphones. So the high-end products that Qualcomm offers give it the power to charge higher prices to its customers compared to its peers, and this is reflected also on its profitability margins, as you can see in that slide. So Qualcomm, if we start with the left-hand side bars, has the largest EBITDA margin compared to its most comparable peers, namely MediaTek and Samsung. And additionally, its superiority in EBITDA margins is transferred well to the net income margins, where the company is still at a better position compared to its peers. Finally, Qualcomm recorded higher return on invested capital, as you can see at the right-hand side of the slide, which is a further assurance that it uses its funds effectively to produce income for its stakeholders. Now, in terms of outlook, due to the nature of the products that the company offers, it has exposure to some secular trends, which are expected to expand its total addressable market in the next years. First, through several agreements with computer manufacturers such as HP, Qualcomm is expanding effectively into the computers market. Also, the 5G implementation unlocked the potential for several new devices to be connected on a network, such as in automotive and in IoT, Internet of Things, which are going to need more computing power going forward. At the same time, the digital world is moving fast towards more complex computing, which is going to require intensive infrastructure equipment, such as cutting-edge semiconductors, in order to be functional and also efficient. So in our view, the company is well positioned to capitalize on its strengths in order to benefit from the growth in its end markets. And as a result, we expect it to grow even faster than its peers due to high quality of products that it offers and the high amount of patents that it holds. So now that we've covered the operations, the main operations of the company and its outlook, let's have a look on the valuation of its shares. So in this slide, you can see the evolution of the blended forward price to earnings multiple of Qualcomm in the past 5 years. This is a useful multiple to get an idea of the valuation of the company compared to its own history. And based on the chart, its shares are currently traded at the lowest multiple of the past 5 years. And this pressure is due to the increase in interest rates in the previous months, which, as a discount factor of future growth, affects negatively the stock prices, and especially those of high growth companies like Qualcomm. Also, the war in Ukraine and the lockdowns in China, where Qualcomm sells a big chunk of its products, have generated further risks for the company. But having said that, we still maintain our positive view on Qualcomm for the long term, as consumer sentiment and the supply chain risks will start normalizing. In terms of current price to earnings multiple, Qualcomm is still trading at a discount compared to the average of its peers of around 22%. And in that sense, we see potential for the shares of the company to increase going forward due to both a multiple expansion and higher than expected growth in its earnings. So that's all from my end. I will now leave it in the hands of Andrew to walk you through the last 2 sections of the presentation. So
thank you, Nikos, for the introduction. So now we'll be going to the other end of the supply chain, closer to the retail users, where we will have companies like Nvidia, which I would consider quite a household name. In fact, as a consumer, you probably know Nvidia probably from the gaming segment. In fact, its main business is the designing of GPUs, graphics processing units. And as you can see here in the dedicated GPU market, there are 2 main players, Nvidia and AMD. So as you can imagine, we'll do quite a lot of our analysis between these 2. In terms of market share, one can easily see Nvidia's dominance in the market, with a market share that currently stands around 83%. And this chart doesn't include Intel, although Intel do produce their own GPUs. However, these are integrated, not dedicated. So it's not really fair to compare the 2. However, we will also mention Intel as one of the key competitors to AMD and Nvidia. So this list here is from a purely technological point of view, so non-financial point of view. It gives us a brief idea of the strength of the Nvidia product portfolio, at least in the GPU space. And on most reviews, in fact, I mean, I just chose one here, but you can see for yourself. On most reviews which one could find, Nvidia's products are usually on top of the list in terms of quality. Having said that, as is shown also on this chart, AMD does come into play when it comes from a value for money perspective, I would say. So Nvidia products are usually superior, but also more expensive. In fact, if you compare the second column with the last column, the Excel rank with the value rank, you can see this point here exactly. So although its main business remains gaming, Nvidia has been able to expand its graphics applications outside of gaming. In fact, since 2014, Nvidia has diversified its businesses, focusing mainly on 4 end users, which are gaming, automotive, electronics, data centers, and professional visualization. Revenue growth seems to have moved into a higher gear since 2017, when growth reached around 38%. To put this into perspective, since it's not included in this chart here, in the prior 4 years, the revenue had grown by a total of 25.3% over that whole 4-year period. So then in 2017, basically it got more growth, 38%, than the previous 4 years combined. And in fact, since 2017, Nvidia continued to consistently post substantial revenue growth, with just one exception in 2020. However, the next year, 2021, the situation was completely different, as revenue increased by a massive 52.7%, followed by another 61.4% in 2022. Growth in 2023, maybe it's good to point out here that Nvidia's year ends at January, so we're currently in 2023 in terms of financial year for the company. And growth for this financial year is expected at 25.7%, meaning that revenue would have tripled in just over 3 years between 2021 and 2023. What we can also see from this chart are the two main segments from where growth is coming from, which are gaming and data centers. So, for example, gaming recorded a growth of 40.6% in 2021, followed by 60.6% in 2022. In terms of data centers, which was, I would say, the main source of growth in these years, they posted a 124% growth in 2021 and 58.5% growth in 2022. So data centers has definitely become one of the most important segments together with gaming. The others, I would say, are still at a relatively infant stage, particularly the automotive segment. However, these are likely or should provide growth further down the line. In terms of product offering, I would say that what sets Nvidia apart from the other semiconductor companies is that one could argue that Nvidia is not really a chip company, but rather a platform company. It's in the business of accelerated computing. This refers to the use of specialized hardware to speed up the processing substantially. So, for example, recently Nvidia has announced platforms for the metaverse, what they call the Omniverse, but it's the similar concept, but more for different purposes such as engineering. They also announced platforms for various other segments like healthcare, autonomous vehicles, and data center security. So we could see some growth from these segments going forward. The vast solution portfolio that Nvidia has puts it well ahead of any of its competitors, who mainly produce more standalone products rather than a holistic ecosystem like Nvidia. From a profitability perspective, the trend is also very positive, with all profit margins improving consistently over the past 5 years, and these are expected to keep improving in the coming years. So, for example, gross margin at the moment stands at 65.5%, which compared to an industry mean of 53.7%. And also on the net income margin, it's currently at 33.9%. To put this growth in perspective, in 2020, it was at 26%. So now it's at 33.9%, and it's expected to continue going forward to reach 40.7% by 2023. So we can see this element of growth not just on the revenue side, but also in the profitability margins point of view. One cannot mention Nvidia at the moment and not mention their most recent earnings call, which had an element of mixed feelings, I would say. So on one hand, as you can see here, the company beat both on the revenue and EPS point of view. On the other hand, however, it did revise down its revenue forecast for Q2 from 8.44 billion to 8.1 billion. And this shortfall can be attributable to the Ukraine situation, as well as the lockdowns in China related to COVID-19, as these are anticipated to result in a loss in revenue of around 500 million. So that revision down in the forecast can be attributed to these two situations. It was interesting to see how the market reacted to this earnings call, but we'll see that in more detail in the technical analysis section of this presentation. The main question on Nvidia, I think, remains on the valuation. I mean, there's no denying that Nvidia is a fantastic company. However, one can question its valuation, even after a significant correction in the past few months. So currently, Nvidia is trading at 32.5, its blended forward earnings. This is significantly higher than AMD at 22.3, and even higher than Intel at 12.6, as well as the industry in general. The difference to Intel can be easily explained. I mean, if you look at the long-term growth, you can see quite a divergence in Nvidia with the long-term growth, which is the growth anticipated in the next 5 years. which is at 24.4% for Nvidia. For Intel, it's 6.15%. So when we use the PEG ratio to combine the two, Nvidia gets a PEG ratio of 2.07, while Nvidia is relatively cheaper at 1.41. So one can understand the difference in PE between Nvidia and Intel. However, when comparing to AMD, it's a bit more difficult to justify Nvidia's valuations, as AMD has a lower PE but higher growth rate. In fact, the PEG ratio would be at 0.6, so significantly lower than Nvidia. So it's a fact that Nvidia is trading at a premium. The question is the premium justified? This premium can be attributed to the higher diversification in terms of market segments which Nvidia has. It can be attributed also to the stronger market shares which Nvidia has, and also the higher profit margins, as we saw when comparing even to AMD. In fact, also when we compare the sustainable growth rate of AMD with that of Nvidia, so on a more long-term basis, assuming that without the need to go for further debt, AMD has a sustainable growth rate of 10.9%, while Nvidia has a sustainable growth rate of 39.3%. So all these are reasons that one should consider when trying to see if the premium which one has to pay for the Nvidia stock is justified or not. So to start concluding on Nvidia, we'll go through quickly the SWOT analysis or some points from the SWOT analysis. So in terms of strengths, Nvidia definitely is a leader in basically in any sector it delves into through its strong track record of innovation, the high profitability margins, few competitors, if any, come even close to those types of margins. Its product offering, which I think puts it apart, as I said, from its competitors, and the unrivaled market share. And also, based on analysts or experts in the area, it's also one of the market leaders from a technological point of view, which eventually translates to its products in the GPU segments, the autonomous driving, the Omniverse, and various other segments. In terms of weaknesses, as we just mentioned, the stock is trading at high multiples. Another weakness which one should point out is the dependency on third-party suppliers. And also looking at the last quarter, another weakness would be the weaker than expected guidance for the next quarter, which is caused, or it shows the impact which the lockdowns in China, as well as the situation in Ukraine, has on the stock, which, I mean, we can't know for sure when the situations will improve. In terms of opportunities, obviously various opportunities. As we said, quite a few segments which are still at a relatively infant stage. We can mention data centers, the Omniverse, which could offer growth in the future, as well as the automotive segment. In terms of opportunities, also profitability is expected to continue improving, so that should also improve the bottom line of the company. The recent sell-off could provide an interesting potential entry point for the company, and also Nvidia offers some exposure to cryptocurrency in terms of using their GPUs for cryptocurrency mining. In terms of threats, one cannot not mention the potential impact of rising interest rates, which could further hurt valuations, especially of growth companies. There's also strong competition, particularly from AMD, which, I mean, they offer different products, but in the same segment, they're definitely worthy competitors. Supply chain issues, which could persist, could also affect Nvidia. And as I said earlier, it looks like the stock is more or less priced for perfection. So there's little to no room for error in terms of reaching guidance and achieving revenue growth. Also, one last point to mention in the threat section is a potential correction in the gaming segment due to weaker PC gaming and slower cryptocurrency mining, which could also have an impact on future quarters. So moving on to the technical analysis. So here you can see the chart of Nvidia from a long-term point perspective. So the stock has been on a positive trend for years, in fact, connecting the highs since 2016. A trend line can be established, the red line on the chart, which acted as resistance on multiple occasions and also as support during the period between 2020 and 2021. In October 2019, the price trajectory took an even steeper turn, climbing around 700% from that point to the November 2021 high. From a shorter term perspective, so we can see first the breakout from that orange line there, which is the medium term positive trend line in October 2021. And this eventually proved to be a false breakout, as the same trend line failed to act as support in January 2022. During the subsequent weeks of the correction, the stock broke in below all moving averages basically, so the 20, the 50, the 100 and the 200-day moving averages. And as you can see, the latter, so the 200-day moving average is below the 50 and the 100 days moving average, which is further evidence of the lack of momentum which the stock is currently experiencing. Since November 2021, as you can see, the blue channel there, a clear negative parallel channel has emerged. The next support line could be at around 155. And following the most recent earnings, although as I said, the market took some time to digest the news, but the price eventually bounced off the 155 level and is now in fact testing the resistance of the negative channel. So the next few days will be interesting to see if the stock breaks out of this negative channel or if we continue to trade within that blue channel. So back to Qualcomm now, which Nikos spoke to us about. From a technical point of view, from a long-term perspective, we can see that Qualcomm had been trading at a relatively sideways path for quite some years, with support around the 48 level. However, in early 2019, it kicked off at a very steep move, which was further boosted by the COVID-19 sell-off in March 2020. So in fact, from the bottom of the sell-off in March 2020 until January 2021, so in less than a year, the stock rallied over 180%. Looking more from a short-term view, so since then, the main support has been around the 125 level, which has been tested several times over the past year and a half. And since February 2022, the stock had been on a short-term negative trend, falling below all moving averages, just like we said for Nvidia. The 100-day moving average is now likely to fall below the 200-day in the coming days, also showing an element of lack of momentum. However, so far, the 125 support has proved key, so it will also be interesting in this case to see how resilient this remains if the negative pressure continues. So that is the end of our presentation. Thank you for your attention. I hope you found it interesting. Should you have any questions, do not hesitate to reach us on our email, as Mark said at the beginning, asset.management@jesmondmizzi.com. We would be more than happy to reply in more detail. So thank you and have a nice afternoon.